Hey traders, this is Ron Heat at Market Tamer. Happy Sunday. Hope you guys are having a fantastic weekend. As always, nothing in this presentation shall constitute a recommendation to buy or sell any security. Trading stocks and options involves risk, and specific financial issues should always be addressed by your financial advisor. Kick off here with the SPY. Another up week, 5 straight days of positive action. We closed at 288.57. We are within striking distance. One more nice up day could get us to new all-time highs. We take a look at the Dow. ETF, the Diamonds, DIA, they are also within just shouting distance. It's a matter of another strong up day, and will we be setting new all-time highs there as well. The Qs within striking distance too. The IWM, the Russell 2000, it had a big up day on Friday, technically. It broke through the 200-day moving average firmly. Volume picked up. This is a huge divergence. It is not near all-time highs, which are back up there near 170. Like it's like the SPY, DIA, and Qs, but at least it's starting to come along for the ride. If it takes out the closing high, 157.77, we're only talking like, 40, 50 cents or so. Once that happens, then 170 is the target technically. The mid caps, also strong day on Friday, took out the previous high completely, target back up there towards 370. I got some questions on Lyft, and let's take a look here. I'm going to go 10 days. There we go. I'm going to change this to 15 minutes. I did a little research before the video, and you can see that once we got above the orange line, which is the 50-period moving average on the 10-day, 15-minute chart, once we get above there, it's been keeping it as pretty decent support and moving higher. So I said we would revisit Lyft after we got a couple days in the books and see if there's some kind of technical something going down. That does seem to be it. So if I wanted to trade Lyft bullish, I could consider being long, but then if it gets below the 50-day, not the 50-day, the 50 period, the orange line on this 10-day, 15-minute chart, that would be the stop out. Otherwise, maybe I could consider a percent stop loss or a previous swing point. But right now, I think the 50 is interesting, so something fun for paper trading. All right, here is Snapchat. If I go to a 1-year chart on Snap, I had a question on this one. And the big move occurred in February on the earnings gap. Then we broke through the 200-day, and then it back tested the 200-day and the 20-day here. So if I zoom in closer, the 200-day is the purple institutional moving average. We got above that cleanly on the 22nd of February. We came back and tested the confluence of the 20-day in red and the 50-day, or the 200-day in purple, and now we're pushing higher. So I would also consider a 20-day EMA exponential moving average as a potential trailing stop on something like Snap. Upside targets, I would just go to consolidation points, about 10% higher still in the 13 and then up to $14 area. And how about the Home Depot? Talked about this one being seasonally bullish. It popped on March 21st. Consolidated, and it's just shooting higher. This one just keeps on running. It's getting close to the 205, 210 area, which would be the next target technically. So seasonality just keeps on working. And then another question on KHC. I said I would keep an eye on this one. This is the Kraft Heinz company. It's one of Buffett's stocks. Big gap down, still going nowhere. They seem to be defending the 30, call it $2 area, $32. Right now we're at 33. A little bit of a perk up on Friday, but we're still tied with the 20-day EMA. I mean, technically we're about 4 thousandths of a cent maybe below it, or we're above it. But the point is this: if it gets just a little higher, then the gap down point here around 35, not that much higher. We get into the gap, then the gap fills on the table as a technical target. Yeah, the 50 days in here, and that could slow us down. And I would definitely want to see how the stock responds to that. But as of right now, just a little bit higher, the gap down point, 50-day, and then a gap fill. All right, so nice short video. Bulls have the edge going into this week. They are firmly in control. The first sign of weakness, if you're interested, would be a close below the red line. If we get below that 20-day EMA on the SPY, the S&P 500 ETF, or the Dow, that would be a sign that, maybe a short-term top is in, some profit taking is coming in, and then we want to pay attention to the 50-day in orange as well. So again, have a wonderful week. I'll see you in the next video. Take care.